Hey guys, what's going on? Another video on the stock market update. Today we're going to talk about how to manage a losing trade. Uh, if you've seen the video yesterday, you'll know exactly what trade I'm talking about. We're going to get into that, and we're going to talk about another short that I put on today right after the buffer. So looking at the tape right now, we got the S&P futures basically relatively flat. Down about 3 handles. NASDAQ futures are actually up a few handles. The Dow futures are leading the way to the downside. It's down over 0.5%, about 0.64%. Got the Russell down about 0.25%. But this comes on the heels of yesterday. We had a big move after the Fed Chair Jerome Powell spoke. Um, the Federal Reserve's preferred inflation data just cooled. Risk assets are flying high, per Benzinga. Looking at the headline, says headline PCE came in at 6% for October, down from 6.2 in September. Um, so a number of key indicators that the Fed looks at is showing like a slight cooling of inflation. And so they're saying that, basically with these falling in line after 4 consecutive 75-point basis interest rate hikes, that they may cool down and go 50 points. Now, I already showed you guys in a previous video where you can go see the probabilities of what they're going to do even before this news comes out, right? But I'm just reading the news just to give context, because they can make these estimates real easy to beat or real easy, whatever they want to go along with what's going on, with the actual market. So I don't put a whole lot into it. We already know that there's a high probability of there being a um 50 point interest rate hike. And so they're still raising. So that in and of itself, in my opinion, is bearish for the overall market. But of course, opinions don't matter. I put on a short position. I put on a short call spread yesterday in IWM. And I think when I put it on, the market was like right around in here, right at the right at this moving average, excuse me. And the market just took off right after. And I said in the video that, when you have news events like that coming up, anything can happen, and it did. So we had a nice rally yesterday. So the put spread that I put on, let's go to the trade tab and we'll take a look at it. It was right here. Yesterday it was 16 days. Today is 15 days. You notice you don't see it anymore. I had to roll it. So I had the short 186. And I think I had bought the 181. So if we come over here and we look at the chains, we're gonna come over here and look at order chains, and we're gonna be able to see that right now on that particular trade, you'll see that you got this red down arrow that's letting you know that currently it's a loser, unrealized loser, because I haven't closed the position, down 81 bucks in it. But what I did was, seeing is that, close that up, seeing is that the market was going against me, instead of letting this go in the money, right? So before it got to 186, you see right now it's currently a little past 186. Yesterday it was like 185 or something like that. So I had this on. All I did was buy it back. I sold it to open. I bought it back. Let's clear that out. And then came down and reestablished the position down here. Excuse me. I was on the put side. I'm sorry. It was 186, 191. I'm sorry. I was on the call side. So I was over here with it, right? And then the market came up, and then I closed it out or rolled it, is what I would say. I bought it back and then rolled it at the same time. So when you do something like that, it was just buying this back. It would have been like it was already open, so I bought this because I sold it to open. Then I sold this to close because I had bought this. And then you just close this up and then you come reestablish the position down here. And then I sold I think it was the 187 and bought the 192. And we can come over here, excuse me, 188 and bought the 193. So I got a chance to move it down too. I rolled it out and down, excuse me, out and up. So it was here at 186. I moved that short call to 188. And instead of being in here at 191, I moved it to 193. And you may say, that gave me more room. So now that trade, my break even is out further and I picked up a credit for it. So you never want to, unless it's a penny or two, you really want to roll for credits because that means you're taking in more premium. The initial trade was open. I took in $1.35 in premium. When I rolled it, you see it says roll. I picked up 8 cents. So now my position and my premium collected is 143 because of the 8 cent plus the 135. Now you can see right now I'm just down I'm down 81 bucks. And you may say, what's the point in rolling? Like, Ray, why would you do that? It bought me more time. If I would have stayed here at 15 days, um, yeah, I could have basically, I would have still been, I would have still been good at this point. Now, yesterday, I didn't know the market was going to come down today, right? So obviously, I benefited from the down move today, like it's down, about 81 cent. But yesterday it was moving. So the thing about rolling is if you're going to roll, you need to roll before you get in the money or like right there at it, because that's when you're gonna get the most bang for this for the short call, or if you're on the put side, the short put. If you wait till it goes past that, then that's less, it's gonna be a harder roll. That's when you risk like having to pay to roll. So I'd rather have looking like the market's gonna go up. So I may have to sustain this for a while. So if it continues to go up past this, I got 50 days for it to go up here, chop around, and maybe come back in and make money. I bought myself some more time. And that's all rolling does. If the market instead of going up would have gone down, I probably would have closed it out yesterday for the profit or rolled down. So, if it's going down and you want to maintain the position, you can roll the call spread the other way instead of up and out, right? So if you get that, hit the like button. I'll try to see if we next year, like I said, with the portfolio, the way I'm gonna do it next year, we're gonna mainly do buying stocks. I'm gonna start. I mean, the beginning. What's the first trading day of next year? January 2nd. Let's see. The first is a holiday. I don't know if the market's open on the second. I'm not sure. But if it is, I think the market may be closed on the second. But if it is, I'm gonna start on the second. If it's open. If it's not, then I'll start on the third. And on that day, I'm gonna come on here and maybe buy a share or something or a few shares, depending on how expensive it is. We're just gonna buy stock. I'm gonna be buying stock, you know, every week, or every 2 weeks when I get paid. Throw some money in here, we'll buy stock. And we're just gonna do like a regular kind of like a little portfolio, just buying stock, and then we'll manage it. And you'll see, you guys will get to see me managing that stock position. Like when the market goes down, when it goes up, we'll be adding to it. Things like that. It's gonna be real basic, real easy for anyone to follow. So you could probably get a chance to see me do, some basic stuff then. But rolling, you're either gonna, not everyone likes to roll. Some people just close the position and take the loss and then look to do something else. But you notice, like, when you look at this, it says right here, it says unrealized loser, right? I don't think you're gonna see it in the video because of how I'm recording this. But this down red arrow means that it's an unrealized loser. So I hadn't closed it yet. So I'd rather buy myself some time because I still think that we're in a the type of market where we can still get a big move to the downside and I could close this out. And I got 50 days. So I'm chill. I'm cool. I'm cool with losing 100% of the trade, right? So I don't mind sitting and waiting. Now let's talk about a short that I put on today in Merck. I bought a put spread in Merck, and you're gonna see if you're looking at Merck right now, you see it's been up. Merck has been rolling pretty good lately, right? You see on the RSI is red, so we know it's overbought, right? Um, Look at the MACD, right? Today is the first day we're seeing it starting to decelerate. So we got that going in our favor. And I got something else a little different up here, ADX. And anytime you got an ADX like really over 30, like when it's in the 30s, it's trending. When it gets to 40, it's like a extended trend. You know what I'm saying? So with it being at 42, yeah, I'm looking forward to pull back some. So I could be wrong, but however, I'll go in, I do something, I do an in out spread. I bought a put spread. This is an easy way to get short without actually having to short stock on margin or do anything like that. I generally like to do 30 days. So, somewhere right around 29. You see, it's at 29.36. I came right here at 36 days. I bought the 110, sold the 108, and I did that for, um, pull it up and look at the chains. Did that for $97. I think that's trade price $97. So currently I'm down about $5 on it. And that's that. And all I'm gonna do is wait. I just need the market to now if we analyze this, now you could say, let's go to the analyze tab so I can show you. I don't need a big down move, guys. So today, what I would need today to make if I paid $97 and I want to make half of that. So I'm looking to make maybe about $50. Let's say if we wanted to make $50 a day, the market is at 109.52. We would need it to get to just today 109.52. If we wanted to make $50 on this trade, we need the market to get to one. Now you're looking up there at that box, and I'm moving I'm moving down the T0 line. 104.54. 104.54, which is what? $5. So I get a $5 move, I make $50. Now, let me show you a trick. Let me show you guys a little trick. Let's move this um a week from today. So we said right now we're at 36 days. Let's go to 29 days. How much do I need this to move now? At 29 days. So at 29 days, we needed to get to just to make $50. 29 days, we needed to get to 105.04. Not as much, about 50, 60 cents. Let's go another week. Because what's happening is as time goes along, you're going to get the Greeks begin to change, right? So the closer it gets to, remember I told you guys when you start getting down around 21 days, you're more subject to directional movement. So we went 7 days from 30. So let's go another 7 days. Let's go down to 21 days. Did I do that right? Yeah, excuse me, 8 days anyway. Go from 29 to 21. Now, let's go look. So that means if we was to hold this 15 days down to 21 days, What do we need this to get to 15 days from now? Excuse me. Yeah, 30, yeah, 36 to 21, 15 days from now. Just to make 50 bucks, we needed to get to 105.62. You see how so basically 2 weeks, within 2 weeks, we need this to move maybe $4 and we get half the money. Do you see? And so now the more money that we want to make on the trade, the longer the more directional movement we would have to have. And see, we don't need, now let's look at the chart, because basically we need a $4 or $5 move. I mean, let's keep it, keeping it to get this $50. Look, basically to get 49, I'm trying to get it right at 50. We needed to move, that's 105.62. We needed to move about $4 to make this money. Now let's go look at the chart. Can we get, is it possible to get a $4 move? I'm looking at support right here. So we got this high. You see where this wick pulled back, came right here and then took it out. What level is that? That's right there at 104. 104. That's easy. That's easy. $5, and we need a $5.50 move to get right there. So all we need is a little pull down, bloop, bloop, somewhere down into here, and we make that money back. That's it. So, and what I'll do is I'll set up a GTC good to cancel to take profit. And that's at the end of the, and that's it, guys. That's all I'm looking for. I may hold that longer. Just depends on what the chart action is doing. But once again, I ran a little scan. I have a scan that I run a certain way to find these trades. These little put spreads, easy to find. Something I'm looking for stuff in the market that's extended. And that's really do a pullback. Now you don't always get it. You don't have to get it, but most of the time, you get something. Let's say you were short right in here. You got that easy from here, 94 to 84. That's $10 move. From just depending on, right here. What is this? 188 to 84. That's a $5 move. Probably would have been able to hit that trade there. Right here, you would have been able to hit this trade here. Right up in here. You can hit it here. Probably would have hit it here. Think that's about $4 or $5 there. 6 from that high to there. So you don't need a big move to just get a small amount. Now, if you're trying to hold and collect the full thing, like the full 100 or the full, $103, you got to hold it. And you're probably going to have to hold it to expiration, close to it. That's why we manage early. Manage your losers, manage your winners. Take profit on your winners, and then try to manage the losers to get more time to buy, till you can be right. And with that, guys, that's it. Comment in the comment section like some stocks that you want to see me mark up, or what I think about them. Let me know what you think about this video. Put something in there like what you want to see me do. And that's going to be it, guys. I hope you enjoyed it. I'm out. Peace.